The crypto market has bottomed. I'm calling bottom right now in late December 2025. If you get one thing from this video, one thing, let it be this, that you will never again see prices this low for cryptocurrencies such as Bitcoin and XRP, which is why I believe that this is the best time to buy before the bull market in 2026. And there's one reason why I'm saying all of this: President Trump's tariffs. Now, this is a contrarian perspective, but just hear me out and have an open mind. My argument is very simple, and that's this: that we have already experienced the worst effects of President Trump's tariffs in 2025, and now going into 2026, we're going to experience the positive effects of his tariffs in the American economy, which will then spill over into the stock and crypto markets, thereby triggering a bull market for 2026. Now, let me give you these four major reasons for why I believe these tariffs will spark the next bull market that will send crypto prices soaring in 2026 and beyond. Reason number one: bringing jobs and production back home. So here's a simple idea. Tariffs make foreign goods cost more, so companies want to make things in the US instead. And this helps to bring back factories from places like China. For example, in Trump's first term, steel tariffs boosted US production to about 87 to 88 million tons in 2019. And now, big car makers like Ford and Toyota face huge tariff bills. So Ford is switching from electric cars to gas trucks in the US plants to cut their losses. But this shift isn't about patriotism or national pride. It's about building stronger supply chains that are less vulnerable to global disruptions. For example, forecasts suggest that tariffs could support GDP growth of around 2% in 2026. Now, combine this with President Trump's emphasis on energy production, which is often summed up in the phrase "drill baby drill," that has helped push gas prices below $3 per gallon for the first time since 2021. And now you have lower costs fueling everything from transportation to tech infrastructure. Okay, so what is the result from everything that I'm saying? More employment, rising wages, and increased spending. All factors that historically lift stock markets and cryptocurrencies during periods of optimism. Reason number two: revenue windfall. So contrary to the view that tariffs simply raise costs for Americans, which is what most of the narrative was from the mainstream media, evidence shows foreign sellers often absorb part of the expense to stay competitive. For example, this year alone, duties are projected to add around $200 billion to federal revenue. Now, consider trade with America's closest neighbors. More than 75% of Canada's exports and over 80% of Mexico's head to the United States, while these partnerships represent just 3% of the American economy. And new laws like the One Big Beautiful Bill, which was signed in July 2025, cut waste and boost take-home pay with tax changes. Moves like the TCJA Permanency Act want to keep tax cuts going, giving businesses breaks for tools and research. And the early 2025 market drops that we saw back in April seem to be short-term because they're paving the way for bounces as the Fed cuts rates to add more money flow. And for crypto, this extra cash is important because it could turn these lows into big wins in 2026, which is what I strongly believe. So these early market dips in 2025 seem to be temporary adjustments, which therefore sets the stage for recovery as interest rate cuts from the Federal Reserve increases the available capital. Reason number three: the global leverage game. So contrary to what people believe, tariffs don't just close doors. They're essentially a bargaining chip. And regardless of where you fall on the political spectrum, you know Trump loves to get the best deals. By matching other countries' fees, we essentially push them to drop theirs. And though China is tricky, they do need our buyers. But the good news is that there have been positive developments. This includes new ASEAN agreements and the UAE's pledge of $1.4 trillion in US investments over the next decade. And since big US companies also get around 28 to 41% of their money from overseas, initial disruptions in 2025 were to be expected. But switching to home base can help local jobs and buying going forward. And Morgan Stanley experts say that as worries ease and rules loosen, markets could rise over the long term. And why this is especially important for cryptocurrencies is that stronger world trade builds investor confidence. This was something that was sorely lacking consistently throughout 2025, but it's going to be very important going into 2026, given President Trump's supportive measures such as his executive orders that promote digital assets. And reason number 4 is the full Trump playbook, with fewer rules, more energy, and cuts via the DOGE group, which trimmed government jobs by 9%. Even as total spending rose, tariffs can boost gains because there's cheap energy, new tech, and steady world links that help. Pay is growing faster than prices, and foreign cash promises from 8 to 20 trillion, as Trump says, are coming in. Now, many experts can doubt it, but real results, like 19% stock gains in 2017 after tax changes, show something very different. Trump's way of building economic trust, of which we've seen the worst effects in 2025, will be what turned these crypto dips into growth going into 2026. So to wrap up, yes, tariffs do have downsides. I'm not saying they don't, but what I'm trying to say from all this is that in time, they do spark jobs, cash flow, fair deals, and linked policies that will trigger the next crypto market boom. So if you're convinced, give this video a like. And if you disagree, then let me know why in the comments below and I'll do my best to get back to you. But either way, whether you agree or disagree, thanks for watching and I'll see you in the next one.